Hello everyone, this is Victor here. Welcome to the Intelligent Investor channel. Recently, many subscribers asked me to make a stock analysis video about Baidu stock because there was a large sell-off of Chinese stocks in the past 1 month. Baidu stock did drop as much as 26.41% in the past 1 month as of March 26 this year at the time of making this video. Baidu did very well in 2021. For example, the stock increased as much as 113.67% in the past 12 months. Baidu also had another IPO in Hong Kong recently, but the stock dropped 15.08% in the first week of IPO this year. In this video, I'm going to talk about is Baidu stock still a buy, especially since Cathy Wood's ARK funds recently started investing in Baidu in recent months. First, I will talk about Baidu's 3 major risks ahead, then I will talk about Baidu's 2 biggest growth opportunities ahead. After that, I'm going to talk about Baidu's intrinsic value calculation. I will show you my fair intrinsic value calculation of Baidu so you will know whether Baidu is currently overvalued right now, fairly valued, or undervalued. Then at the end, I'm going to talk about am I going to buy Baidu stock? If you like this video, hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent stock analysis and market commentary videos every week that will help you become a great investor. Let's start. The first major risk about Baidu and any other Chinese stocks is that right now the SEC of US is implementing the HFCA Act that could delist any Chinese companies or any Chinese stocks if they cannot be audited by the PCAOB, Public Company Accounting Oversight Board, within the next 3 years. For example, if Baidu cannot be audited by PCAOB for 3 consecutive years, and if Baidu cannot prove that it's not controlled or owned by the Chinese government, Baidu is likely going to be delisted from any of the US stock exchange. This is from the US Congress website. If the commission determines that a covered issuer has 3 consecutive non-inspection years, the commission shall prohibit the securities of the covered issuer from being traded on a national securities exchange or through any other method that is within the jurisdiction of the commission to regulate, including through the method of trading that is commonly referred to as the over-the-counter trading of securities. SEC will address how to prohibit and delist Chinese stocks going forward. We have to wait for the upcoming news. If Baidu cannot comply with the HFCA Act, the Holding Foreign Companies Accountable Act, then Baidu will likely be delisted within the next 3 years from the US stock exchange. This means Baidu stock will likely drop by a lot. This is why Baidu decided to have a second IPO in Hong Kong recently, in case it gets delisted from the US stock exchange. This applies to any of the Chinese stocks listed in the US stock exchange. The second major risk we should all be aware of is the antitrust probes in Chinese companies right now. Right now, the Chinese government is aiming at big tech firms such as Alibaba, Tencent, Ant Group, Pinduoduo, and Meituan in China because all these firms have the largest market shares in China and they tend to have anti-competitive behaviors. Baidu also has the biggest search engine market share in China. For example, Baidu had a market share of 78.41% compared with Sogou's 13.81% and compared with Google's 1.89%. Baidu is essentially a near monopoly in China. And if there's an antitrust probe against Baidu, Baidu will likely have a huge fine that will affect the stock value. The third major risk about Baidu is that Baidu's current search engine business is declining. For example, its current main search engine's business marketing revenues have been declining steadily for many quarters. If you look at Baidu's financial statement here, you will see its online marketing services, which is essentially Baidu's search engine, and all its advertising revenues have been declining in the past 3 years between 2018 and 2020. Also, Baidu's cloud services revenue have been increasing steadily between 2018 and 2020. That's a good sign for Baidu. What's happening right now is that advertisers are spending more money on other platforms from Alibaba, Tencent, ByteDance, owner of TikTok and Douyin of China, and other live streaming and short video platforms in China. Now, you may want to know this. Currently, Baidu has 544 million monthly active users in December 2020, compared with Alibaba's 902 million monthly active users, and compared with Tencent's 1,225 million monthly active users in December 2020. Baidu owns iQIYI, the Netflix of China. What's happening right now is that Baidu's iQIYI subscriber growth already peaked. For example, Baidu's iQIYI has 101.7 million subscribers in December 2020, down from 104.8 million subscribers in September 2020. iQIYI is not profitable at all. In fact, iQIYI is hurting Baidu's bottom line net profit. I believe Baidu will eventually need to sell iQIYI to either Alibaba, Tencent, or other firms in China, because iQIYI is not contributing to Baidu's overall profit growth or even its revenue growth right now. When it comes to investing, we have to be forward-looking instead of backward-looking to predict the company's future earnings and growth. It's always easier to look at the company's past instead of looking at the company's future. When we're calculating the company's intrinsic value, we have to look at the company's future cash flow in order to determine its current value. In the past few years, Baidu's revenues from its core search engine or its core advertising business has been slowly declining, but right now Baidu is returning to a growth company again. For example, Baidu's management said this in the most recent Q4 2020 earnings. This indicates Baidu is returning to a growth company. Baidu's management said this: for the first quarter of 2021, Baidu expects revenues to be between 26 billion RMB and 28.5 billion RMB, representing a growth rate of 15% to 26% year over year, which assumes that Baidu's core revenue will grow between 26% and 39% year over year. Personally, I believe there are two main growth catalysts for Baidu. The first growth catalyst for Baidu is its Baidu AI Cloud services. Personally, I believe Baidu's AI Cloud business will drive Baidu's revenue growth over the next 10 years. For example, if we look at this market research right here, Baidu's AI Cloud business had a market share of 8.4% in Q4 2020. Alibaba had the biggest cloud market share in China of 40.3%. Tencent had a market share of 14.9%, and Huawei Cloud had a market share of 17.4% in Q4 2020 in China. Here's the important part. If you look at this chart right here, you can see spending in cloud infrastructure services have been increasing steadily in the past few quarters, and it's growing very fast. This is all driven by online gaming, streaming, e-commerce growth, increasing use of online services, as well as company and governments increasing spending on private and public cloud infrastructure services in China. Now, all these cloud spending economic trends are confirmed by Baidu's management comments in the latest Q4 2020 earnings call. The total revenues reached 30.3 billion RMB, increasing 5% year over year. Baidu core non-advertising revenue in the fourth quarter grew 52% year over year to an annualized run rate of $2.6 billion, driven by the convergence of AI solutions, cloud services, and consumer internet. Here is another indication that shows Baidu's revenue growth will be driven by AI cloud services going forward. Through years of investment in research, AI chip design, developer community, patents, and talent development, we are turning AI into innovative use cases. For example, Baidu AI Cloud differentiating with AI solutions grew 67% year over year in Q4, reaching an annualized run rate of $2 billion. I believe Baidu's second growth catalyst is intelligent driving business, which means it includes Apollo self-driving tech, robotaxi, robobus, and its upcoming EV company. You may not know this already, but Baidu's robotaxi already achieved level 4 autonomous driving. And now Baidu is far ahead of other competitors in China, even ahead of Tesla's autopilot and full self-driving in China. Now, Apollo robotaxi and robobus fleets have served over 210,000 rides as of December 2020. Robotaxi is already available in Beijing, Changsha, and Changzhou. Baidu is the first Chinese company to receive a driverless testing permit in both China and California. Baidu is forming an EV company with Geely Holding Group, the owner of Volvo and Geely Auto, to make its own electric vehicle. This is one of the main reasons that Baidu stock increased a lot in 2020. Now, this is from Baidu's 2020 annual report. This shows Baidu's Apollo self-driving tech is far ahead of the next competitor. In autonomous driving, Apollo is the market leader in China with 4.3 million accumulated test miles and 199 autonomous driving licenses across China as of December 31st, 2020. Our 199 autonomous driving licenses reflect the geographic reach of Apollo testing scenarios in China compared to the second player with approximately 20 licenses. This is from the latest Q4 2020 earnings call. It shows that the Chinese government is investing aggressively in electric vehicle, autonomous driving, smart transportation infrastructures that will enable robo-taxi and robo-transportations in the next 10 years and more. Baidu CEO said this. Let me elaborate on the trends that we're seeing. Starting from smart transportation, China aims to raise its global competitiveness in the transport sector through aggressive infrastructure building. The Chinese government is promoting a multi-year plan to install smart transportation networks in cities with sensors and cameras on public roads, connecting vehicles with roadside units to foster safer driving, improve throughputs, and reduce carbon emissions. Such government initiatives encourage municipal government to shift their budgets toward a more software-defined transportation network. Apollo's strong brand in intelligent driving and our holistic approach to smart transportation make us well suited to capture the opportunities in smart transportation infrastructure development. Apollo's self-driving services are still in the very early growth stage. This means its revenue is not going to contribute significantly to Baidu's total revenue yet. China has the biggest population and the largest EV market in the world. If Apollo self-driving services, including its robo-taxi and robo-bus, succeed, this means having thousands of robo-taxi and robo-bus in the major cities in China, then I believe Baidu's stock will worth a lot more than now. This is why Cathy Wood of ARK Funds started investing in Baidu in recent months. Now let's talk about Baidu's intrinsic value. I define Baidu's intrinsic value as the present value of its future free cash flow, discounted using a reasonable discount rate. I want to show you my intrinsic value calculation here. There are three key assumptions. The first key assumption is that Baidu is becoming a growth company again, and its growth rate will be approximately 0% to 20% CAGR growth rate each year for the next 5 years. The worst case scenario is that Baidu will have 0% CAGR growth. The normal case scenario is that Baidu will have 10% CAGR growth each year. And the best case scenario is that Baidu will have 20% CAGR growth each year. The second key assumption is that we're using a discount rate of 11.2%. And the third key assumption is that we're using a 15.2 price to cash flow multiple from Morningstar to calculate Baidu stock's terminal value after year 5. If you look at this spreadsheet right here, I'm going to show you how I calculate Baidu's intrinsic value. Under the worst case scenario, we're assuming a 0% growth rate over the next 5 years. So if we discount all the free cash flow over the next 5 years and discount the terminal value to the present day, then Baidu's intrinsic value should be around 221 billion RMB or $34 billion US dollars in market cap, compared with its current actual market cap of 70.2 billion US dollars. As of March 26, 2021. And if we divide it by the weighted average shares outstanding, then its intrinsic value should be around $98 per share, compared with its $280 per share as of March 26. I'm giving this a probability of 10% because I don't think this worst case scenario is going to happen. Under the normal case scenario, we're using a 10% growth rate each year over the next 5 years. Then if we discount all this free cash flow over the next 5 years as well as the terminal value to the present day, then Baidu's intrinsic value should be around 336 billion RMB or $51 billion US dollars, compared with Baidu's current 70.2 billion US dollars market cap. And if we divide this by the weighted average outstanding, then Baidu's intrinsic value share should be around $149 per share, compared with its current market price of $208 per share as of March 26, 2021. Under this normal case scenario, I'm giving this a probability of 45%. Under the best case scenario, we're assuming that Baidu's growth rate will be around 20% each year over the next 5 years. If we discount all this free cash flow growth over the next 5 years and the terminal value to the present day, then Baidu's intrinsic value should be around 497 billion RMB or 76 billion US dollars, compared with Baidu's current 70.2 billion US dollars market cap. If we divide the intrinsic value as by weighted average shares outstanding, then Baidu's intrinsic value per share should be around $220 per share, compared with its current stock price of $208 per share as of March 26, 2021. I'm giving this a probability of 45% because there's a likelihood that Baidu is returning to a growth company. So if we actually add all these 3 case scenarios together and multiply them by their probabilities, 10%, 45%, and another 45%, then I believe Baidu's fair intrinsic value as a whole company should be around 60.6 billion, compared with its current market cap of 70.2 billion US dollars. Also, its intrinsic value per share should be around $176 per share, compared with its current price of $208 per share as of March 26, 2021. In conclusion, will I be buying Baidu stock? I am not buying any Baidu stock and I don't have any position in Baidu. I like Alibaba and Tencent Holdings market dominant businesses a lot more than Baidu's businesses, even if Baidu's AI, robotaxi, and Apollo self-driving tech are way ahead of its competitors in China. Now Baidu's business is returning to growth because of its AI cloud and its intelligent driving businesses, especially its Apollo self-driving tech and its robotaxi fleet. Personally, I believe Baidu's fair intrinsic value is around 60.6 billion US dollars or $176 per share. Under the best case scenario, if Baidu can grow at a rate of 20% CAGR each year over the next 5 years, then Baidu stock should be worth around 76 billion US dollars market cap or $220 per share. Now, all of these are only my opinions and my analysis. You have to do your own research and you always have to do your own due diligence. If you like this video, hit the like button, subscribe, and turn on the notification button. I will continue to make many great stock analysis and market commentary videos every week that will help you become a great investor. Thank you for watching. This is Victor from the Intelligent Investor channel, and I will see you in my next video.